Hello, everyone. In this episode, we are going to talk about supply and demand and its impact on the price of real estate. Especially in today, we are going to talk also the March market update of 2023. We are going to look at some of the real estate data. We are going to talk about new inventories, number of sale volumes, then what is the total inventory, and especially in today we are also introduced to you the distress properties information. So let's tune in and see what's happening. All right, hello everyone. Welcome back to this March 2023 market update. I'm so excited to receive this because this is the official end of quarter one, right? And some of you may be surprised, why do I talk about March 2023 in May? Well, the fact is always the monthly market update is a little bit late in terms of data. This one is out on the market, is public on April 18, and it takes a day for me to understand and prepare the presentation for that for you. And for that reason, I am very excited to let you know about this information because it has a lot of good insight about supply and the demand in today's market. So let's just dive right into it. Number one, the monthly sales. Okay, this month we have about 7,417 homes that is sold in March of 2023. So that is actually, when you compare to previous year, is a reduce of 22%. But one of the key important is that if you're looking at the month over month, we have about 33% increase when you compare to the previous months. Okay, we are going to look at some of the factors that cause reduction in year over year monthly sales in the next couple of slides. But as you see here, the demand is still very strong, even with the high interest rate. There's still 7,000 people, more than 7,000 people getting under contract to purchase the home. Okay. The next number that we are going to look at is the new inventory. This is talking about the supply. All right. So 7,771 homes that are newly listed on the market. It is also an increase of 9.9% when you compare to the previous month. However, it is a reduction of 19%. Okay, 19% when you compare to the previous year. So that is also a reduction compared to the previous year as well. New inventory, why there are less people wanting to get their home sold into the market, we are going to look at the very end of the presentation. So stay in so that we know a couple of insight information about that. Okay, that brings up to the total inventory of 16,922. That is increased about 50%, right? About 50, almost 99. I'm sorry. When you do year over year, it's almost 100% increase because last year is about 8,000. This year is about 16,000. Okay. There's a couple notes here though. Okay, if you compare to month over month, it is reduced of 6.9%. So there is less homes for sale available on the market as of today. Okay. Now this number, as I told you, is the end of March 2023. As of today, though, the number of total inventory every day when I log into MLS is about 13,000 homes. So that's about 3,000 homes less than this number already. So the total inventory going down very quickly as well. What happened and what will happen? We will disclose that information very quickly as well. The next number that we are going to look at, this is a brand new chart that I added because a lot of people are interested about the distressed properties. Distressed properties is basically some homes that are under foreclosure process. And as you see in 2023, right now we have about 12,081 homes that is in distressed situation as of March. That number has been continuously going up since November and December. Okay. Is it that much? Is it too much? Is that a concern? Not yet. Because in a couple of videos before, I told you that on average, Maricopa County can easily consume about 10,000, if anything less than 10,000 distressed properties, we're still under the very normal distress situation. Okay, of course, we don't want that happens anytime, but is this number, while it is bigger than last year, 1,072, it is not much of a concern as of right now. It's only increased about 6.4%. Now, obviously, you see the difference between 2020, the difference between 2021, 2022 versus 2022, 2023, right? Well, we have much of a different market back then. All right, so that brings to the total number of inventory, monthly supply of inventory 2.28. Okay, it is a reduced of 3.25 in February 2023. So this number less, that means all the inventories available on the market, and if there is none new, there's no new inventory get onto the market. It takes about 2 months and 28, 2 and 28, that means is about, what do I say? It's about 6 days, okay? 2 months and 6 days, 6 to 7 days to get all the homes sold in today's market, okay? Next one is 77 days, okay? It increased actually 5 days compared to the this should be a decrease of 5 days. So it's getting sold quicker. Yes, this is the average days on market. It's only 77 days versus 82 days of February of 2023. So it's getting homes sold faster as well in nowadays market. So that is actually a really good news for the seller in today's market, right? There's more demand. The demand is still increasing, and the supply is less. That means you have less competition, and as a result, you have less days on market. Okay. Next is a set of 3 number. That is a sale. That is a prices. Okay. The new list price is about 450,000. When you compare to the previous year, it is actually reduced of 4.3%. So now seller already start to realize that they have to be more realistic with the asking price, because I mean the home gets sold very quickly and there are demands there. But if you ask for too much, it's kind of useless, and no one gonna do that, because if you ask above market price, they know, the buyer knows, and they will not act very quickly on that property. Okay, the median sale price is about 420. It is actually a decrease, of course, of 8.7% when you compare to the previous year. That I'm saying that it is, of course, because the first half of 2022, back then we still have very low interest rate, and there's still a great demand for housing, and therefore there's a multiple offer situation. As of right now, we also have multiple offer situation, but it is it's nothing compared to the level of 2022. So it's still reduced compared to previous year of 8.7%. For the forecast of April 2023, the median sale price is going to keep be almost the same for $20,000. Okay, so we'll see whether that is accurate or not. Now, we're talking about supply and demand, and I use this slide as a comparison. Where is the reduction in the supply versus demand? As you see, well, this is actually the chart to show the difference in the demand, the difference in the type of buyers on today's market between 2022 market and 2023 market. Right here, the new construction for 2022 is about 1578. For 2023, is about 1703. So that's actually an increase, right? So for new construction, because of the high interest rate, the main reason why we have the story that the lower the demand is mainly because of the interest rate. And the builder, because they have a very flexible, at the beginning, when the interest rates start going higher, they already offer a lot of incentive for interest rate buy down and financial support. So it helps the buyers a lot for that situation. And as a result, as you see here, the result is very positive for new construction because they are actually the only type those are the only type of buyers that have increased compared to the previous year of March 2022. Okay, whereas you're gonna have iBuyers reduced from 443 to 36. iBuyers are some companies, so for example, like Open Door, Zillow, even though Zillow already out of business for iBuyers, we have Redfin, we have OfferPad, right? Those are company called iBuyers, and their purchase process reduced significantly. Similarly, institutional, these are the company that big cash buyer company, right? They hold off. So basically, both big cash type of buyers hold off on purchase in 2023, and therefore that's reduced a lot of demand in today's market. So while you say that the interest rate is impacting the demand a lot, it's actually not just the interest rate, because these are the people who have cash in hands, right? They also want to pull back as well for that reason. The other types of buyers, including the normal buyers, the investor buyers, those type of things also a big reduce as well. This is easy to understand because they are the type of buyers that impacting the most because of interest rate goes so high right now. Okay, so they reduce significantly. However, though, the demand here is the main impact for all four types of buyers in general. Okay, so we see that iBuyers reduce a lot of purchase from the year before. If you talk about Open Door, OfferPad, they are more popular, more well known in 2022 than now because they kind of quiet about the situation. Institutional is the same. They scale back a lot in purchasing. So, investor, is it the great chance for you to win? Because if those are the big company and they do not have any interest in purchasing, in another word, that means you have more chance to buy the homes than about the same time last year, right? So this is actually a very good chance for the investor, smaller investor, to jump right in and get your first couple investment properties rather than waiting. And eventually, when the iBuyers and the institutional buyers, investor come back, then you have to compete with them as well. Okay. Last but not least, this is a comparison of the median sale price. Okay, the median sale price. The pink here is the 2023 years. Okay, 18 is red one right here. 19 overall higher than 18. 20, 21, 22, and 2023. Now, unfortunately, I do recognize that the median sale price compared to 2022 is actually drop, right? It's actually dropped, but this is still the second highest compared to other 4 years in the past, 2021, 2020, 19, and 18. It's still the highest. This is second highest. And in fact, in the short term, if you see here, you're gonna see that there's a small increase. It's a small increase from all the way from like around February until now. Okay, so the median sale price, in contradictory what a lot of people thinking, we still have a higher increasing. A lot of people thinking that it's going to be reduced because of the low demand that we see in this slide right here. So what happened? Why is the median sale price is actually going higher when the demand is in fact goes lower? The reason is that no homes for sale available. Well, not that no home available for sale in the market, but the fact that the total inventory of homes getting less and less make it less supply on the market. And because of the situation that I'm sorry, I clicked too fast. The situation that the supply is actually reducing at a faster rate than the demand. Okay, and therefore there's the imbalance between supply and demand. And whenever there is an imbalance between the two, the price has to change. In this situation, the demand is lower, the demand is getting lower. However, the supply is even lower than that. And therefore, the price has to be going higher. It has to go higher to contradict, what's the word? To be able to overcome the reduction in supply, right? So for that reason, you see that even though the demand is dropping, like in this situation, for all types of buyers except for new homes for sure, right? You see that the median sale price is actually going higher because the supply of houses on the market actually get less in today's market. All right, thank you so much, everyone. If I'm very excited to be able to present to you all the information here. Please let me know if you have any question, if you need any help in regarding to the real estate market trend or any other question about the real estate market. Let me know and I will get back to you. My phone number is 602-515-2442. Thank you. Bye-bye.